Discount. Look, I use this Fibonacci, so price actually got back to this Fibonacci level, which is in 0.618 and 0.78, and boom, I saw this price action, this huge red candle, when I saw it, I had to position at the center of that red candle, the center of it, and this was my entry. So I was triggered, and boom, it hit the profit. Now this is the recent trade that I'm on, and sincerely speaking, I actually had double mind on putting on this trade, but nevertheless it also gave me what I wanted. Why did I got into this trade? Because I trade a higher time frame, and since the market broke this structure, this was a higher structure, it was a major structure, because we are dealing with a higher time frame. So the major structure was broken down, and looking at price, this is actually an order block. There's another block here, so price stepped into that other block and went up and broke this structure. This is a structure. Since price broke that structure, I had to wait for retracement, little bit retracement. Got into it. I don't know if I'm explaining this the way you should understand, but this is the first time I'm making a video and talking on this video. So anyhow it is, I hope you understand. I'll make a better one. I'll get better on making videos. So I saw that the price actually fulfilled or balanced itself already. So then I felt like that the price is actually going up, because now look at what the price is doing, just dancing around. Also broke the structure and started going up and dancing around. I got into this trade when I actually saw a double bottom. This, we call it a shoulder. This is an inverse head and shoulder. This is actually an inverse head and shoulder. So it's actually go back to where it was and started ranging. When I saw the W pattern, I got into this trade. But according to the trend is actually bearish for now, because it broke this structure. Yes, it broke this structure. So I had to position at this point. Why did I position? Because according to my Fibonacci, the price is actually heading at the discount price. So a lot of people could have gotten in here, because price was, it gave a bearish engulfing here, and this place many traders could have been trapped because of this price action. But based on the experience I've actually grabbed from the market so far, I know that this actually is actually going to trap a lot of traders, because these are the premium price. So I like taking my trades at the discount price. You know, as a businessman, you don't want to buy your goods, you don't want to buy things when it's too high. You want when price is actually cheap. So I had to wait for here, even though I just trade what I see. We might likely got taken out. So yeah, that's just how the trading works, the trading game works. You can also get taken out, but I just trade what I know, what I see. So that's why I use the Fibonacci a lot. And since I've actually seen that there's a break of structure here, then I had to put the fib from the recent high down to the low. So this is actually at 0.618, and I had to position for it. So let's just see what's going to happen later. Now let's go back to lower time frame to actually see what the price is doing, because we are on a higher time frame, and I make my analysis and even make my decisions on a higher time frame. Now going back to 1 hour, let's see what price is doing right there. Yes, so you can see according to price action, there is also a bearish engulfing at this zone. This black line is a zone, and the buyers are getting weak. See, look at the candlesticks, they are getting weak, they are no more strong enough. So, and you can also see another bearish engulfing up here. Now let's move to lower time frame, like the 15 minutes. So according to 15 minutes, what am I seeing here? I'm seeing that price created the low, created a high, took out this high, broke the structure. This is the minor structure, broke the structure, and also came back to take out this. It closed below this recent low. This is a pure price action, how I follow the markets, how I watch the market. So that's what I'm explaining. Since it took out this low and closed bearish below it, then also that made me confirm, that gave me a confirmation that the buyers are actually getting weak, so the price is actually going to tank. So that's why I never exit the trade. I just stayed there because I just set this position, and as I came back and I saw that this one has already hit take profits and this one is already on my entry. So instead of just going out, I had to leave it like that. So since I've seen this, it gave me a confirmation that the sellers are there. So these ones are buyers trying to push their muzzle. So see what price is doing there. See, it came. I also created the low. See, this high is not. They're just weak. So when it created a low and went up, created another low and went up, it also changed character. See where it changed character. It just broke this low, this recent low. Now coming back to that zone that it previously broke that for hours where it's previously highest is going to reach here. Nice, because I'm also seeing favor look gap. It's a favor look gap here. So this trade is actually active, that people can even enter right now. They can enter right now, and I'm expecting it to tank. I'm expecting it to go down. Yeah, that's actually my bias on GBP JPY. Let's head over to look at what I did on GBP USD. Now, see, look at another thing. Remember, the higher time frame analysis, the higher time frame actually tells you what's happening more in the market. Look at that candlestick. Do you recognize this candlestick? This is a shooting star up there at this zone. So this shooting star signifies that the buyers are weak. The buyers are tired, that the price is mostly going to start reversing to the downside. Now let's just move to GBP USD. Alright, this is what trading with the higher time frame actually makes one to be free from noises, to escape all of these noises in the market. So since this month I've just been on this chart, this pair. I only took 2 trades on this pair this month. When I saw this market, I saw that it was actually retracing. This is a retracement. You can see that the overall trend is bullish. Even from the higher time frame, sorry about that. Even from the higher time frame, the overall trend has been bullish. So this is actually from the low and the high. This is my strategy. I use the support and resistance and demand zones. So I don't want to make it to be too I don't want to make the strategy to be too how will I call it? I just want to make it to be simple, even though I know a lot of strategy, but I decided to make it to be simple to understand. So this is the low, or here this is the low, and this is the recent. This was a resistance that turned to support. As you can see, the resistance was broken. Now I came back to that support. So some people also took trades from here, from this. Let me go to 4 hours. Wait 4 hours. Yeah. Some people took trades from here, but I wasn't in the market. I could have actually entered here. But I wasn't in the market that period. So when I came back, I saw this market here, and I saw the market have actually left me at that time. It was around this point that I saw a fair value gap, because the structure was broken. There was a break of structure here. Price started changing character from here. So there was a break of structure here, and I saw a fair value gap. I was doing all this analysis on 4 hours time frame. So I saw that fair value gap on the 4 hours time frame, and I had to position for a sell. Previously, my stop loss was here. That's where my stop loss was, and as price started going on in my favor, I had to adjust my stop loss. So just like the other one did, when I came back, I saw price dancing around that zone, the fair value gap, and the other block here. This is another block here too. So price actually got to the other block. So before tanking down, and this was just like a trap. I set this trap that I know that the market is actually bullish according to the higher time frame. The market is bullish. So but I had to take advantage of the retracement that is happening because I saw a break of structure and a possible pullback. Like I always do, I like using my Fibonacci. I like this Fibonacci a lot. I like using the Fibonacci, so I use the Fibonacci. And sorry, I use the Fibonacci. The Fibonacci was around the fair value gap was around that discount price, that discount zone, which is the 0.618 and 0.7. But since I saw that fair value gap, I was targeting 0.78. So that's one of the reasons why I took this trade, because my Fibonacci actually told me what's going to happen. So when this trade actually took some days to hit to take profits. This was my target. It took some days to hit take profits, but that's swing trading for you, you know. So we don't rush the market. You have to be patient. You have to be very patient, and also manage your psychology while dealing with this. So that you know, one mind will not go and tell you, oh, go out with this, go out from this trade, so before you come back to your entry or stuff like that. So you have to know how to control your emotions. So what you are risking should be a budgeted risk. You shouldn't just go into the market without proper knowledge about risk management and lot sizing and all that. So that's it. When I saw that this actually a trending market, I had to also position, because this is another block. Why is this another block? Because it has a fair value gap. Let me show you. Another block that doesn't have a fair value gap, I don't trade it. I don't trade other blocks with no fair value gap. Now if I should show you, now this is a fair value gap here. This is a fair value gap. Now this fair value gap, I decided to just leave it, even though I didn't mark it out. I just decided to focus on that other block, you know. So I had to mark out the other block, and I positioned this one here. So when this one hits TP, I know that price is actually coming to that zone. So immediately price got there. See, it started reacting almost at the TP, and this is where nearby stop liquidity. There's liquidity here, so I'm expecting price to grab this liquidity, either start going up or you can continue start going down. So we can't predict the market. We just allow the market to act, then we react. You know? So that's that about that on GBP USD. Wait a second. Let me show you my Fibonacci. I love Fibonacci a lot. I like using Fibonacci a lot, like a lot. Now, if I should use this Fibonacci to actually trace or measure this wave, it's also at that discount level, you know. Well, I will even take this as my low. I'll take this as my low. Yes. So that's that about that. I think this video is getting longer, so I have to pause it here and do more videos again. So stay tuned for more trading insights and analysis. And I'm just starting up to do this, so no matter how I do this video today, I just hope you enjoy the time with me. So subscribe to my channel and help me grow, guys. Yeah, peace out.